From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for February 4th, 2016. In today's video, we're going to be taking a look at the EURUSD, the euro, versus the US dollar. Now, it's important to note that over the next couple of days, we have significant news that could affect our overall analysis and the movement for each of the US currency pairs. Tomorrow's NFP, or non-farm payrolls out of the US, could obviously dramatically affect and change the overall analysis we have for this currency pair. Obviously, over the past couple of days, we've seen a change in sentiment and momentum for this currency pair. Over the past couple of weeks, several weeks actually, we've been studying this black box down here at the bottom portion of the chart. You can see that black box, market bouncing around in there from about January 7th till just a couple of days ago, where we broke out of that black box. Our opportunities to trade inside the range or the congestion were numerous. We sold it many times into the orange shaded area, looking for a return of the previous downtrend. Obviously, over the past couple of days, we've seen the breakout above that black box. That's the risk in trading any scenario, is that the market changes and doesn't do what you expect it to do. So appropriate risk strategies are always in order in case the market changes its mind. It does something we don't expect. Anyways, finally broke out to the top side of that orange shaded area and the black box, and now has pressured significantly higher over the past couple of days. So with that momentum, we're going to look to try and take advantage of some of that momentum. We don't want to fight it right now. There's no evidence of reversal, no reason to believe it's going to turn around and go back down just yet. Now again, like I said, non-farm payrolls could change everything that I'm talking about right now, but definitely at the current moment we have an upside momentum. We have bullish momentum, and that's what we want to try and take advantage of until something again changes in the market. If we look back in time along the purple shaded area that you see here in the middle of the chart, right around the 1.1100 to 1.1135 level, follow it back in time. Yesterday we found some resistance there, but let's go all the way back here to the left hand side of the chart, and we can see the support along that same area. So the market found support above 1.1100 in that purple shaded area. And again, back here on the left hand side of the chart, as it was above that purple shaded area, the market tended to find resistance at the orange shaded area. Something else interesting here on the chart, taking Fibonacci from the high of the blue trend line down to the lowest low on the chart. So Fibonacci measurement from the high down to the low puts the 618 Fibonacci retracement level right here at the purple shaded area. So we know that today we've pushed through the 618 Fibonacci retracement level, pushed through what was historical support on the left-hand side of the chart, and that significant price level, 1.1100. So as far as it stays above 1.11 today, our expectation above the 618 and the support level is that the momentum continues to carry through to the next resistance level, which happens to be all the way up here into the 1.1200s. 1260 to 1.1300 is the orange shaded area up here at the top of the chart. So let's put some arrows here. The black arrow, the orange shaded area, represents our resistance. The purple shaded area represents our intraday support with the current momentum that we've seen here for the euro dollar. So that being said, we're right smack in the middle of that. We're right in the middle of that resistance and support. So our risk is higher. No matter which direction we choose to decide to trade this currency pair, if we were going to go short, the risk is that it continues to pressure to the orange zone. If we were to decide to go long, the risk is it dips back down to the support at the purple shaded area. So the current market price doesn't become enticing to take into a trade. However, any dips to the purple zone or rallies to the orange shaded area become opportunities to trade the euro dollar. So that's what we'll be looking for the day today. Again, going back to that Fibonacci measurement from the high down to the low of the blue trend line on the left, the 0.786 Fibonacci retracement level also sits there at the orange shaded area. So a couple of significant things. Fibonacci at the purple and the orange shaded area, historical support resistance backed up over here on the left hand side of the chart between the purple and the orange shaded area, telling us that those are the major decision zones that the overall market will likely be looking at as a potential buy or sell opportunity. And right in the middle is not the very best, lowest risk and highest reward opportunity. So we'd be looking for a dip to the purple zone or rally to the orange zone. Now, in the direction of our current momentum, it obviously makes sense that if it takes a dip back down here to the purple zone, it may become a lower risk, higher reward buying opportunity to target the orange shaded area. The risk, of course, in that scenario is that it breaks down under the purple zone and goes back down again. And of course, Selling into the orange shaded area carries risk as well that the market momentum continues to pressure through. 886 sits up here closer towards the 1.1400 level, towards the top of this red box. So we want to note that there's two better places to take a trade: orange zone or purple zone. Let's take it on down here to the 4-hour time frame. Of course, obviously yesterday it found a little congestion resistance underneath 1.1100. That would to be expected, and now we see it well above there right now. That's 95 pips lower into that purple shaded area. So it would be my expectation today that rather than buying at the very top, doesn't make very much sense today, is that we wait for it to dip back to the purple zone to provide a lower risk and higher reward opportunity to go long on the currency pair. It has to go down before it goes back up. The only other opportunity that I would be looking for here for the day today on the euro dollar would be finally finding resistance, which would likely be all the way back up here towards the upper 1200s for the euro dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.